Welcome to The Explainer. Today, we're going to talk about what really separates the traders who make it from everyone else. And here's a little secret. It has almost nothing to do with finding that one perfect indicator on a chart. Nope, it's all about what's going on right between your ears.
So let's kick things off with a bit of a paradox, a real head-scratcher. On the one hand, trading has never, and I mean ever, been easier to get into. The walls that used to keep people out, they've been completely knocked down over the last couple of decades. Just think about it for a second. The fees and commissions are dirt cheap. There's an endless ocean of free education on the internet. We've got these incredibly powerful charting platforms. For free, you can literally trade markets from across the globe 24/7, right from the phone in your pocket. On paper, it should be easier than ever to win.
But here's the thing. Despite all of those incredible tools, all those advantages, the stone-cold reality is that the vast majority of people who give trading a shot still end up losing money. And the proof? Oh, it's not hidden away. It's right there in plain sight.
See, every single broker has to tell you what percentage of their clients are losing. And you just start looking around. This one, 73% of their retail clients lose money.
Okay, let's check another one. Whoa, this one's even higher, over 84%. Ouch.
And the pattern just keeps going. Here's a different firm. 71%. You see, it's this consistent and, let's be honest, pretty brutal truth across the entire industry.
And just one more to really drive it home, 75%. So this begs a really, really important question. If the tools aren't the problem, if access to data isn't the problem, then what on earth is? All right, let's get into the heart of it. To really figure out why so many traders fail, we have to look at how they're failing. Because it's not simply about being wrong, it's about the way you're wrong. Now, lucky for us, we don't have to sit around and guess. Somebody did the heavy lifting for us. A massive, and I mean massive, study looked at millions and millions of real trades to find the answer. The scale of this thing is just wild. We're talking about 43 million trades pulled from over 25,000 different trading accounts. And what they found is probably the single most important piece of data any new trader could ever see. Okay, so this right here is fascinating. Check this out. The study found that the average trader was actually profitable on 65% of their trades. So get this, they were right more often than they were wrong. But, and this is the huge but, look at the numbers. Their average winning trade was just about 42 pips, while their average losing trade was a whopping 82 pips. It was almost double the size of their winners. And there it is, the single deadliest mistake a trader can make. It's a classic behavioral trap, and it is driven purely by emotion. It's that fear, that little voice in your head that says, hey, you've got a small profit, grab it now before it disappears. And then it's that dangerous hope when you have a loser. Oh, just give it a little more time. It'll come back. It's got to turn around. So here's the bottom line. The biggest problem isn't technical skill. It's not about learning some secret Japanese candlestick pattern. The real war isn't on the chart. It's being fought inside your own head. It all comes down to attitude and mindset. And that brings us to the real key, the core idea of what it takes to actually succeed at this. You have to realize that trading isn't an external game where you try to outsmart the market. It's an internal game where you have to master yourself. You know, this quote just hits the nail right on the head. The journey to becoming a consistently profitable trader isn't about finding some kind of holy grail strategy. It's really a journey inward, a journey of self-discovery. It's all about understanding your own programming, right? Your fear, your greed, your impatience, and then building a rules-based system that literally protects you from your own worst instincts. So let's look at how you can actually do that. Okay, so if we agree that mindset is a skill you can learn, not just something you're born with, then how in the world do you practice it? Well, the answer comes from what professionals do in pretty much every other high-stakes field you can think of, from surgeons to elite athletes. It's a concept called deliberate practice. And this isn't just about putting in hours staring at a screen. No way. This is focused, structured, intentional training designed to improve one specific skill. Like, say, the discipline to let a winning trade run, or the patience to wait for your perfect setup. And you can absolutely apply this to trading. A true professional approach breaks this training down into 3 pillars. First, you've got the technical training. That's the charts, the strategies, the stuff most people focus on. But then there's the physical. Yeah, getting enough sleep and managing stress actually matters a lot. And then there's the mental training. This is the big one, where you actively work on developing the patience and discipline that separates the pros from the rest. So what does this actually look like? Well, here is a perfect example. A trader is going back in time on a chart and replaying a strong trend, one candle at a time, making decisions in the moment as if it were happening live. By doing this kind of simulation, without risking a single dollar, you can train your brain to follow your roles and stay calm under pressure. You build the right habits. Okay, finally, let's talk about what is probably the single biggest and maybe the hardest mental leap a trader has to make, and that's to completely change your entire relationship with being wrong. You know, in almost every other part of life, we are taught to avoid failure at all costs. Get good grades, don't make mistakes. But in any field that's based on probability, like trading, the top performers see the world completely differently. They don't run from failure, they literally expect it. They see it as a necessary ingredient for success. I mean, just look at a legend like Kobe Bryant. The man missed more shots than almost anyone in NBA history. We're talking over 14,000 misses. But here's the thing. He didn't become a legend despite all those misses. He became a legend because of them. He wasn't afraid to take the shot and fail. He just treated every single miss as data, as feedback on how to get better.
So, the final thought I want to leave you with from all this is a question. What is your relationship with setbacks? Instead of fearing your losses, what if you just changed the way you think about them? What if you started to see every losing trade not as a failure, but as tuition, the price you pay for your education in the markets? What if every setback was just another lesson on your own path to mastery?